Welcome back. You are with us on Halftime Report. Nigel D'Souza also in the studios with me this afternoon. And Nigel, I guess there's some green on the screen that's recovered. There's some recovery on the Nifty. But the auto space, I mean, and Nigel's the auto man. I mean, two-wheelers, bikes, he's a man in the house, right? But some serious stuff. Production levels are high, inventory levels are very high, and now we're talking about production cuts. The impact is evident on the stocks.
Absolutely. Yesterday, we were talking about passenger vehicles, in fact, and, how inventory levels are up there. You have discounts as well that are being offered, and that's why Maruti had taken a production cut. And today, in fact, two-wheelers are in focus. I think the biggest losers on the Nifty today are the two-wheelers. In fact, you have Hero MotoCorp that's down, Bajaj Auto as well, that's seeing some selling pressure, and even Eicher Motors is low in today's trading session. So on that note, well, both those two stocks, Hero Motor, Eicher Motors, both of them under pressure. Reports suggest the two-wheeler makers, they're set to cut production. Sonia joins us with further details on that. Sonia?
Well, thanks for that. The situation is pretty grim. It's not just two-wheeler makers, but auto component suppliers have also decided to cut production. Now, a 15% production cut is what the two-wheeler makers could undertake, and the auto component suppliers could follow that up by an 8 to 10% cut. As I said, the situation is very grim. The inventory levels are pretty high. For the two-wheeler space, inventory levels are as high as 80 to 90 days compared to a normal inventory level of around 20 days or so. Even if you look at it from April to February, the two-wheeler industry growth has barely been about 7% versus 14% if you look at it year on year. Now, what is the reason for which even auto component suppliers are cutting production? They are doing that to align their inventory levels to the slowing demand. Now, demand has been slow up until now, but the expectation is that demand will fall further as the new emission norms and the anti-braking system norms kick in. Now, there will be three higher costs that two-wheeler makers will have to deal with, because of which there could be further pressure felt on demand. Let me just take you through them. The impending cost rise from the 1st of April 2019 will be about 1,000 rupees for bikes up to 125cc, and the cost rise will be about 8,000 rupees for bikes above 125cc. That's because the cost increase per bike will be due to three costs. One is the HSRP, which is the high security registration plate cost, will go up by 250 rupees. The CBS, which is the combined braking system cost, will go up by 600 rupees. And ABS, which is the anti-lock braking system cost, will go up by 7,000 rupees. So because of all these costs, the expectation is that demand will fall further from April of 2019, and that could, that's the reason why all these players are rationalizing their inventory. We did get some brokerage views as well, so let me take you through them quickly. HSBC has cut their target price on Hero MotoCorp to 3,500 from 4,000 earlier. They say that volumes are likely to remain very volatile in the coming quarters because of higher channel inventory and regulatory changes. We also spoke with LKP Securities a while back, and they said that the production cut is not a surprise. It is in line with the subdued demand because of the new emission and the ABS norms from April 2019. That will increase prices and hit demand further. And they have in fact tapered down their volume growth estimates for the full year as well. Also, a couple of auto ancillary players have scaled down their volume growth estimates for the full year of FY20 to low single digits versus double-digit growth projections that they had earlier.
Okay, all right, Sonia, let's take that discussion forward then. Sonia was talking about some auto ancillary makers as well that are scaling down. Well, we have one such company with us, LG Balkrishna. Remember, the company is primarily into chains. So they supply chains for two-wheelers. And in fact, they have nearly around 70% of the OEM market. We have with us Mr. Vijay Kumar, the MD of LG Balkrishna and Brothers, who joins us on the phone line. Well, Mr. Vijay Kumar, thanks so much for joining in. Could you clarify first, reports are suggesting that two-wheelers, they are cutting down production for the next few months. Have you witnessed a slowdown in terms of ordering?
I'm beginning to see some slowdown. There was no slowdown till last month, but this month there is some indication that the offtake is going to be lower.
So Vijay Kumar, correct me if the numbers are wrong, but I think Maruti contributes almost 40 to 45% to your business. And then there are other OEMs on the two-wheeler side as well, Eicher, the likes. Now, with a lot of these companies talking about cutting production, is it just a matter of time before you have to rationalize your production levels as well?
We have already started to, and there's a correction. It's not Maruti, it's Bajaj. And we expect a 10% cut in the offtake of all the OEMs. And we expect that to continue till June. So we are also planning our output accordingly.
Okay. All right. I think the last time you joined us, you told us your biggest clients were Hero, Eicher and Bajaj, right? They contribute bulk of their revenues. If you could give us a number out there, how much do they contribute?
Their contribution is
biggest clients, isn't it?
Yeah, they're the biggest clients, about 60 to 70% of our turnover. 60 to
70%. All right. So keeping in mind that there is a slowdown, I remember in the past, you were talking about 1,550 to around 1,600 crores for FY19. Is that on the cards? And more importantly, for the next year as well, you had guided that, you'll grow in double digits. Are you rethinking that strategy?
First, let me say that it might not be very legal for me to comment on what my turnover is going to be. But let's go back to the last quarter. I think we've done about 1,202 crores till the last quarter. And for this quarter also, it will be as per our plans. There will be no changes. And we will reach what our original plan.
Mr. Vijay Kumar, what I was asking you is that for the next year, that's for FY20, when you joined us earlier, you said you'll grow by around 10 to 15%. Given that there is a slowdown now, you're saying that till June, there's likely to be lower offtake from some of your key clients. Will you be looking to scale that down, that growth guidance of around 10 to 15% to maybe a single-digit number?
Yes, we will. My expectation is that we will only have a growth of about 5% next year.
Oh,
5%. Okay, that's quite telling. I mean, this is not an easy patch for the auto sector and also the ancillary players, obviously. Now, I mean, how will this kind of settle in, Mr. Vijay Kumar? What should we be prepared for? Are you looking at lower production levels? What kind of capacity utilization are you actually operating on? And will you have to sort of, take basically take your foot off the pedal, so to speak?
No, yes, we will be lifting off the pedal a little bit. The next quarter, my expectation is that there will be no growth. And the quarter after that, we expect a very marginal correction and then 5 to 10% growth after that.
Okay, so Q1...
That's the reason we've averaged the growth expectation to 5% for the whole year.
So Q1 flat, just to reiterate, and Q2 a drop in growth and basically some revival in the second half of the fiscal. That's what you're saying?
Yes.
Okay.
All right, Mr. Vijay Kumar, if I'm not mistaken, I remember you had added capacity, right? When things were looking quite good, maybe around 12 months ago at Jalna, if I'm not mistaken. And, that was what was helping growth. You were also indicating that you were setting up another capacity at Chennai. Has that already come on stream? Will you be looking to, not go ahead with some of those capacity additions? Or will you go ahead with that?
No, we are going ahead with the capacity addition.
Okay.
All these things are just a small speed breaker, that's all.
Okay.
We are very bullish on the long-term future.
Okay.
And the factory is almost ready. We will now start populating it with the machines.
Okay.
Maybe we will go a little slow on the manpower side.
Okay.
So, Mr. Vijay Kumar, a larger question, sir. What do you think has led to this? I mean, such a sluggish patch that the auto sector has hit. People are not buying, two-wheelers. People are not buying cars. Is it just a fallout of the NBFC crisis and financing is not that easy? Or is there something more to it? I mean, we're not seeing such a dramatic drop in consumption in other discretionary areas. People are still sort of going to the movies, buying pizza, having, alcoholic beverages. What's gone wrong with auto?
One is the NBFC crisis. Cash is a little short. The other one is, people could walk into a shop, pay 2,000 rupees and walk out with a motorcycle. Today, the same person needs about 7,000 to 8,000 rupees to walk in and buy a motorcycle and come out. So that is the whole, that's the problem. That's where the whole problem is.
All right, Mr. Vijay Kumar, final question before we let you go. The smaller part of your business is the metal forming business, right? What kind of an opportunity is there in the market, given that the BS6 regulations, that will be coming into play in the next year as well? And in terms of the export market as well, are there opportunities out there in terms of the smaller division that contributes only around 20% of your revenues?
Yes, but it's not very noticeable. It will. We have planned businesses moving. The metal forming, it takes a long lead time to get the business running.
Okay.
We get the drawings, and then the whole thing is from planning to execution takes more than about 6-7 months.
Okay.
So it's not something that overnight we get something and then immediately supply. It's not like that.
Okay. All right, Mr. Vijay Kumar, we leave it on that note. Let's see, basically strapping up for a slightly bumpy ride ahead. That's the auto sector. Two-wheelers are not an exception. Neither are suppliers to two-wheeler companies.